All right, welcome. So today we're going to talk about throw pillows. Bavarian, Scandinavian. Can you tell the difference? No, I'm just kidding. No, but really we're going to talk about real estate taxes. So most people understand that real estate provides certain tax benefits, but very few people understand what those tax benefits actually equate to and how it works. I've talked to CPAs, I've talked to bookkeepers, I've talked to real estate investors, and almost no one can explain it in a simple way that I can understand. So I had an idea. So I went to my friend, ChatGPT, to get the question answered in as simple way as possible. All right, chat. I have an $800,000 house in San Diego that I've rented all year for $3,200 a month, and my expenses were $3,700 per month. How much can I deduct from my income taxes as a loss? And tell me in a simple way about how much money that saves me. Act as a tax professional, but explain it to me like I'm a fourth grader. Sure, I'll try to make that as simple as I can. All right, so since you're charging $3,200 a month, we'll multiply that by 12, 3,238. Your expenses, you said $3,700 per month. All right, brilliant. So we've lost $6,000, but in the US, good old Uncle Sam lets you write that loss off of your income. Love it, brilliant. This helps you lower the amount of money the government is gonna say that you owe them at the end of the year. But exactly how much does this save? It's a bit harder because it depends on your tax bracket, ChatGPT says. So it goes on to say, let's say you're in a 24% tax bracket, you're able to deduct the $6,000 loss times 24% would equal about $1,440. So you would save $1,440 on your taxes. Okay, great. Now chat, I'm in California too. You know, it can get a little dicey over here. They're asking a lot of money. What do I save in California? And what about depreciation? I've heard that's like a big benefit. Great, let's add in the state depreciation. Okay, cool. So in California, in addition to the $1,440 I saved from my taxes on the federal level, it will save me about $480 cash money on my state taxes. Love it. And then depreciation, wow, that's a monster. So over 27 and a half years, I can depreciate the cost of the house. So let's say it's 80% of the total cost of the property is the house. So it's equal to about $23,273 in yearly depreciation. Wow. So we apply the federal tax rate 24% to the depreciation, that's $55.86, and the 8% state tax rate, you'd save another $1,862. So far, according to ChatGPT, we have $1,440 in federal taxes saved, $5,586 from depreciation, which equals about $7,000. State taxes, we have $480 plus $1,862 from depreciation, so we're at about $2,342. So in total, you'd save $9,368. Now, for those of you who have seen my interview with Gordon Moss, you might know that Gordon's a genius because he predicted that it would be $10,000 tax savings, and he's right. So far, we're at $9,368. But if you want to go a layer deeper, I thought of something ChatGPT didn't think about. I said, Chat, isn't there a rule that caps the amount you can deduct as a loss from your taxes unless you're a real estate professional? Yes, you're correct, Steve. According to the IRS rules, as of my knowledge, or whatever voice chat has. So my takeaway is, if I can be a real estate professional, great, because I can deduct all my losses against my income. But it's like for most people, if I can't and my income's too high, it might prevent how much you can deduct off your taxes each year, but you can carry those losses forward to when you eventually sell the home. Got it. So I'm still gonna get my money, right? Cool. So then I think a layer deeper, I go, okay, chat, great. I've got $9,368 I saved on taxes for the year, but I had an actual cash loss of $6,000. What does that mean? Like, what does that equate to? Sure, I can explain that. I love the can-do attitude of ChatGPT, you know? So follow me here. We saved $9,368 on taxes, but we lost $6,000 cash. What does that ultimately mean? It equates to really cash saved $3,368. So after everything's taken into account, you're likely ahead by about $3,368. This doesn't mean necessarily you have that in cash, but it means you avoided that in taxes, which helps soften the blow. All right, so chat's brought up depreciation because I asked it to. It's brought up cash flow and taxes. So I said, okay, chat, but what about amortization? Amortization basically means you're paying off the debt over time. And I also said, what about appreciation? That's another big factor in why you own real estate is it's gonna go up in value, right? So I said, okay, let's assume a 30-year loan that I got 5 years ago, the market being normal, so let's say 5-6% appreciation rate. How would these factors factor into how this investment performed? And so it walks you through this. It says, well, let's take a look at this. Amortization talks about what that is at a 4th grade level. Thank you, ChatGPT. Then it talks about appreciation. So, and it only used 3% per year. Okay, 3%. At the end of 5 years, at 3%, market going up 3% a year, house is worth $900,928. So that's went up 128 grand in 5 years. And then I said, chat, you're almost done. Promise. This is all I want to know. Assuming I rented the house for 2 years and had a $600,000 loan at a 3.5% interest rate, how much principal did the tenant pay off for me? So the exact amount's going to depend on your loan. It goes on to say, but let's say a 30-year mortgage, you would have paid off approximately $21,000 of principal after the 2nd year. So if the rent you collected covered the mortgage payments, let's say it's rented during that whole time, you would effectively have paid down $21,000 of the loan off the principal for you. And I said, great. So add up the amortization, add up the tax savings, add up the appreciation, and just tell me, ChatGPT, once and for all, what has this property made me? All right, we're gonna add it up. Principal pay down, 21K. Tax savings, 93.68 per year over 2 years. Remember this example, we rented it for 2 years, 18,736. Appreciation, it's went up 48 grand and change over 2 years. Adding all these components up, your property investment may have made you $88,536 over the course of 2 years. But wait, I was losing $6,000. Wait, I was about to sell this property because it was super unprofitable and it was costing me a bunch of money. Well, now you know. And then always thank your AI. Chat, you rock. Appreciate you, in case things go bad, they'll keep that in mind. You're very welcome. I'm glad it could help. Best of luck with your investment. Boom, there it is. ChatGPT explained a very simple thing at a 4th grade level that I can understand, and hopefully you understand it a little better today.